Hello, welcome in. Looks like people are kind of just funneling in right now. So we'll give everybody a couple minutes to get in and get situated. In the meantime, if you guys want to just type in the chat where you're joining the call from and what type of work you do, that would be awesome. Get to know each other a little bit. Okay, Miami. Stephanie, I'm in Florida too. We got another Florida person, Tampa. I'm on the East Coast as well. I'm in Vero Beach. If you guys know where that is, it's like 2.5 hours north of Miami. Wisconsin, Jersey, Nebraska, another New Jersey, another Florida. Awesome. Welcome in, everybody. Super excited to have you guys here. Oh, looks like Renee is having an issue with audio. Hey, awesome. Let's see here. Just going to give about 1 more minute for people to, looks like people are still kind of filtering in. So just give another minute or so. And then we'll get started. Awesome. We got a couple Texas people, a couple New York, California. Awesome. Okay, just starting the business and want to know how to structure finances. Perfect. Yeah, we will talk about S Corps today, which is the structure that we work with at Collective. And we think it's an awesome business structure we'd love to tell you more about. Okay. All right. I think we are about ready to get started. So I'm going to be your webinar host for today. My name is Elizabeth. I am a business advisor here at Collective, and I've been with Collective for about 2.5 years at this point, and I absolutely love it. I love helping self-employed individuals. My experience has revolved around tax and finance for self-employed individuals for the past probably 10 to 12 years. So it's something I'm really passionate about. I am an enrolled agent, which is a credential that you get through the IRS. And my prior experience before I've been with Collective was in tax resolution. So I helped people, again, primarily small business owners who had just not a good understanding of their requirements of being self-employed. And I helped them kind of structure their business a little bit better, get a little bit more structure involved. And also, if they did owe a liability, we helped them with that too. So got a lot of experience across the board and excited to talk about S Corps with you guys. So here is the agenda of what we're going to talk about today. First off, just a couple of minor housekeeping items. We will have a Q&A at the end of the presentation. So if you guys do have any questions, I love answering them. And I want to make sure that I get to all of your questions. So if you do have them, please type them in the Q&A and not in the chat box. It just makes it easier to make sure that we're not missing anything. All right. So as far as what we're going to talk about today, we're going to go over self-employed tax basics and why those self-employment taxes are so expensive. We're going to discuss what an S Corp is and how it's going to help you save money, why you should get started now, how to get started, and then again, we'll go over those Q&As. So what is Collective? You've probably seen us on Facebook or Instagram, possibly Google. We are actually the first all-in-one online financial platform designed specifically for self-employed people. And the reason we're around is because being self-employed is pretty complicated. So here you are just running your business happily. You've got all these kind of little thought bubbles in your mind going like, okay, I've got to pay my estimated taxes. I've got to do my bookkeeping. You're always thinking about taxes at the end of the year. Am I going to get hit with a surprise tax bill? Am I in compliance? Is my business set up correctly? What do I use to do my bookkeeping? Do I use QuickBooks? Should I be on payroll? Should I have employees? Should they be on payroll? There's lots of kind of little bubbles floating around. And on top of all that, you're probably also thinking like, how do I save for retirement? And what about health insurance benefits for me and my family? So there's a lot to consider when you're self-employed, and it can be a little overwhelming. And then things get even more complicated when it's time to make a financial decision. You kind of notice that all these little bubbles should be working cohesively together to make things easier for you as the business owner. But a lot of times that's just not the case because you're running your business. You are, a real estate agent or a software developer. You're not a tax professional. You're not a bookkeeper necessarily. So a lot of things are just possibly slipping through the cracks, making things a little bit more difficult for you. When you are with Collective, we are a one-stop shop. We try to give you a more cohesive experience so that way all of these little bubbles are working together to give you a better financial experience. You've got bookkeeping, payroll, financial advice, estimated tax calculations, retirement benefits and planning, compliance, personal taxes, business setup, and business taxes, everything just in one large bubble in one place, just making it a little bit easier and giving you peace of mind that things are being done by a team of professionals and you're not alone. So we have a little poll right here. Let's talk about in this poll what you guys are struggling with most right now. Is it going to be just setting up your business? I know we had a couple people saying they were brand new and just had kind of some questions about that. Is it taxes? I know we're still in tax season. So I know a lot of people are in the process of filing their taxes for 2023 or have just filed them and maybe have a little bit of shell shock about how much they owed. Is it just wanting to kind of get on a better path in terms of more comprehensive books, comprehensive financial advice, or planning for retirements and benefits? Okay. Thank you guys for your participation there. Now let's talk about self-employed federal tax basics a little bit. But first, we're going to talk a little bit about entity structures, specifically pass-through tax structures. So if your business is any of these over here on the left, so sole proprietorship, partnership, LLC, whether that's a single member LLC or a multi-member LLC, or an S Corp, then you have a pass-through tax structure. And what does that mean exactly? It means that your business is not paying income tax. So there's no corporate income tax that your business is paying. All of the profits are passing through to your tax return as the business owner. Taxes are paid on the profit that passes through to your individual tax return, and you are not subject to double taxation, which is great. So, like a business structure, for example, like a corporation, just a C Corp, would be subject to double taxation, where the business is paying corporate income tax. And then there's another layer of taxation where the individual shareholders are also paying tax as well. But that is not the case. We love pass-through structures because we don't get double taxed. So, what type of taxes do you pay when you're self-employed? So, you're going to pay income tax. And income tax is generally what you think of when people talk about their taxes or their tax bracket. And those tax brackets are going to be between 0% and 37%. Most of us are somewhere between 20% and 37% in terms of our marginal tax rate. Everybody's is different, and it does depend on how you file, like whether you file single, if you file joint with a spouse, and what your total household income is. And then you're going to pay an additional flat rate of self-employment tax, which is 15.3%. And that's, again, on top of your income tax. Now, self-employment tax, again, it's a flat rate. It's always 15.3%. And that goes towards FICA taxes. So Social Security and Medicare tax. As an employee, so let's take my situation, for example. I am an employee of Collective. So I technically still have to meet this 15.3% requirement for my Social Security and Medicare tax, but I only have to pay in half. So I pay 7.65%, and then Collective pays the other half. But when you're self-employed, you have no benevolent employer to kind of share that burden with you. So you are responsible for paying the whole 15.3%. And that's really where taxes start to become quite burdensome when you're self-employed. Those self-employment taxes really add up after a certain point. So why are they so expensive? So again, this is just kind of a visual representation of what we just discussed. So let's say this is Elizabeth, this is me. I work for Collective. They're paying half of my self-employment tax, and I'm paying the other half. In this example, it would be $15,000. So Collective pays half, I pay half. Again, when you're self-employed, you got to pay the whole enchilada, whole 15K. So it adds up to be a lot. So this is how the money flows through your business if you are a pass-through business structure. So one of those structures we talked about earlier, sole proprietorship, LLC, S Corp, they all have the same structure. So again, you have your total revenue, which is the money that you earn from running your business, providing your goods or services, minus any tax deductions, and that's going to equal your net income. If your net income is positive, it's called profit. If it's negative, it's a loss. So then you take that profit or loss, and that is what flows through or passes through to your tax return as the business owner. So the profit or loss passes through, and then you pay on the business profits. You pay self-employment tax at 15.3%, and then you pay income tax again at your individual income tax rate. So it's going to be, for your income tax, it's going to take into consideration your business profits, plus all other income. So again, if you file joint with a spouse, it'll take into consideration their income. Say your business is your side hustle and you have a W-2 job. That also is a factor in calculating your income tax rate. So business profits plus any other income minus personal adjustments, minus any standard or itemized deductions. And that's where you get your income tax rate. So again, you're paying self-employment tax and income tax on your entire profit from your business. So what is an S Corp? But first, let's talk about legal structures because they do go hand in hand. You cannot have an S Corp without a legal entity. A legal entity is formed in a state with the Secretary of State. Entities are generally required to file an annual report, which just kind of lets the state know what business activity the entity is having. That is completely different than your tax return. The formation and informational returns are done with the Secretary of State, which is usually a completely different group than the taxing authority. An S Corp is a tax election. So an S Corp is not a legal entity. It is just a tax status. And what that means is that S Corps only exist in the tax realm. The IRS assigns every business structure default tax treatment, which is basically just a fancy way of saying that the IRS decides how every business structure is taxed. Single member LLCs are automatically taxed the same as sole proprietors at the federal level, unless they ask otherwise. And that is what's called a disregarded entity. You may or may not have ever heard that term, but as the bullet point says, a single member LLC's default tax treatment is still just being taxed as a sole proprietor. The IRS considers that, like I said, a disregarded entity, meaning that the IRS just disregards that you have an entity whatsoever, and they just continue to tax you as an individual. So it sounds a little mean, but as an LLC, you do have what's called tax flexibility, meaning that you can choose to be taxed in a different way. And one of those ways, and the one that we are very fond of here at Collective, would be as an S Corp. So as a single member LLC, you can ask the IRS to tax your business under subchapter S, which would be under the rules of an S Corp. So why are S Corps so great, and why do we love them so much here at Collective? There's a couple of reasons. And number one is going to be potential tax savings. So S Corp owners do not pay self-employment taxes on their profit, but there's a catch. So an S Corp creates an employee-employer relationship between you and your business. The IRS requires that your business pays you reasonable compensation for your work via a W-2, so a formal payroll. Now, reasonable compensation is a bit of a tricky area, and we'll get more into that a little bit later. We'll talk more about reasonable compensation, but there are many factors that go into calculating reasonable comp. The most important thing to know is that it is a portion of your business profit gets paid to you on a W-2 formal salary, and that's a requirement, an IRS requirement of having an S Corp. You're going to pay payroll taxes on your reasonable salary. They're W-2 wages, and you will have withholding. Payroll taxes are 15.3%, just like self-employment taxes. So same thing, just a different name. Half of the payroll taxes would be withheld from your paycheck, and half are the expense for the S Corp. So again, we talked about, this chart here we looked at a little bit earlier. This is just a refresher of how the money flows through your business when you're a sole proprietor. Again, revenue minus tax deductions equals your net. If your net is positive, it's profit. If it's negative, it's loss. That flows through to your tax return. You then pay self-employment tax at 15.3% and income tax at your ordinary income tax rate on all of your business profits as a sole proprietor or disregarded entity, like if you're a single member LLC. Now, how it works with an S Corp is a bit different. So bear with me here. So same thing here. You have your revenue again, which is all the money that your business makes from offering your goods or services. You then subtract your salary as a business expense and all other business expenses. Now, this is going to give you the S Corp's profit or loss. Now, this is going to flow through along with your salary to your owner's individual tax return. So it would be your salary plus the business profit. And that is what you are going to be taxed on. So you will pay income tax again, same deal, plus any other income, filing joint with a spouse, their income. If you have additional W-2 income or other businesses, that will all be factored into the income tax calculation, minus any adjustments or deductions. So let's look at an example of how an S Corp election can change your taxes and maybe help you save some money. So in this middle left column right here, we have somebody being taxed as a sole proprietor or single member LLC, which we learned a couple slides ago is called a disregarded entity. And in the middle right column, we have the same business if it were to be taxed as an S Corp instead. Everything is going to be the same for these individuals in these first four rows. So they both have gross revenue of 160K. So they've earned 160K from offering their goods and services. They have expense write-offs, so business expenses of 5K. And then they contributed 10K to their retirement, so their SEP IRA. So their profit, so again, their revenue minus any expenses, their profit is 145K. So they have a positive net, which means they have $145,000 of profit. The difference is going to come into play here with the owner wages. So the sole proprietor, single member LLC, disregarded entity is just not set up to pay themselves a wage and receive any tax savings. So they have to pay self-employment tax at the flat rate of 15.3% on their entire net profit of 145K, paying over $22,000 in self-employment tax. And again, given that we're still in tax season and you guys are all dealing with this right now, this number probably looks familiar to some of you. Now, on the other side here, the S Corp owner is able to pay themselves a wage in the form of that reasonable compensation. So they've determined that their reasonable salary is going to be $45,000. So now that's all they have to pay this 15.3% on is just their salary instead of the entire net. As you can see, it results in a pretty big difference. So instead of having to pay over $22,000 in self-employment tax, they're paying 7. So they are able to save in this scenario over $15,000 just from switching to an S Corp. And then if we look a little deeper, just to see how everything is going to be kind of characterized. So the disregarded entity, because again, they're not able to pay themselves a wage, their pass-through profit is $145K. Whereas with the S Corp, their pass-through profit is $100K, because remember, they have $45K on a salary. So they still have the same amount of taxable personal income of $145,000. It's just going to be characterized in 2 ways with an S Corp instead of 1. So when, again, you're with your disregarded entity, all of your money is going to show as just net income from your business. So this whole $145K is net income from your business. With an S Corp, it's going to reflect on your tax return as $45K in wages and then $100K in pass-through profit and net income from your business. And one other really important thing to note, because I know talking about a salary can be a little bit scary when you're self-employed, because a lot of times you have fluctuations in your business. And we'll probably talk about this more later, but just know that you still have full access to all of your money. So you don't have to try to live on just the salary portion only. That would be very hard for everyone. Things are so expensive now. So you would get a formal payroll of your reasonable salary. And then with the leftover business profit, you take distributions of that. And that is just a transfer from your business bank account to your personal bank account, similar to owner's draws that a lot of you are probably taking right now. It's just classified in a different way, but you're still paying taxes on all of your money. So again, you do get a break in the self-employment tax, but income tax is still being paid on your entire net. Uncle Sam just won't have it any other way. So you're paying taxes on it. It's your money. You have every right to it. Typically, best practice is for payroll to run once a month. But if you do have more seasonality to your business, you can make adjustments. And same thing with the distributions. We encourage you to take those at least once a month. So here we go. We're going to delve in a little bit more to reasonable salary. So getting a salary through my S Corp is great, but how much do I pay myself? So there is no set standard for reasonable compensation. It is frustrating that the IRS has not given a formula to calculate reasonable comp. It is what's called a facts and circumstances argument. And I always encourage everybody, even if you don't want to go with collective, to have a tax professional help you calculate your reasonable salary, because it is such a gray area with the IRS. They've been arguing about it in court since the 1940s, of course. So yeah, always just get help for this, at Collective. That is part of our service that we provide during onboarding. Our tax professionals help you pick a number for your salary. And then we also keep an eye on it for you throughout the year as your business changes. If you are making more than expected, we may have to increase it or make sure that we run another payroll by the end of the year, just to make sure that you're in compliance. So it is very important that you get help with that piece. And your salary is a tax strategy, because your salary is going to be with an S Corp. It's the mechanism that drives those tax savings that we looked at a couple slides ago. So it's really important. So how does the money work? You have your business income. So again, this is your revenue minus any operating expenses, business expenses, deductions. And then you're going to get a payroll. So we talked about running a formal payroll with your reasonable salary. That's going to be a flat salary we help you pick. And then you have those distributions that we talked about on the last slide as well. So that would be, the remaining business profit that's not on your reasonable salary, you take distributions of. And again, that's just a transfer from your business account to your personal account. And then another really cool thing about an S Corp is reimbursements. So certain expenses you can get reimbursed through your S Corp. There's something called an accountable plan that you have access to as an S Corp owner. So anything that's like a static expense. So think about things that don't really change for you month to month. Home office deductions. If you work from home, like most of us do, and when you're self-employed, if you do have an area of your home carved out specifically for business use, you can deduct that as a business expense. And you can do that on your accountable plan, and you can be reimbursed for that. And Collective does support accountable plans, so we guide you through that process as well. So, which one is right for you? LLC or S Corp? If you are very, very new to business with little earnings, like if you're just starting out and you don't have a lot of clients or contracts yet, and you're earning less than $60,000 in profit per year, and you want a really simple and straightforward tax structure, then an LLC would be a better option for you. An S Corp is just a little bit more of a complex business structure, just inherently. Anytime Uncle Sam is going to let us save a few bucks, he's going to make us jump through some hoops. So there's just more moving parts with an S Corp, which we will get into later. But if you are earning consistently more than $60K in profit per year, you want to be able to maximize your retirement savings. And if you have enough cash flow in your business to make regular payroll runs, then an S Corp might be a good option for you. So why start now? Why is now the best time to start? So you get a full year of tax savings for 2024. Sorry, that should say 24. If you have an LLC set up already. So if you had your LLC in the prior year or prior years, we can submit what is called a retroactive S Corp election for you. Now, the deadline for that was technically March 15th, but we are able to apply for what is called late election relief for you. And it still has a really high probability of getting approved by the IRS. So starting now, you get to have the benefits of a full year of tax savings. Your taxes and bookkeeping will be more simple. Because if you are able to start now and get that backdated, you're just going to need one tax return for the 2024 tax year instead of two. And then we're still in the beginning of the year. You can start off this new year with new money habits. So I know I've mentioned a couple times tax season. It's always top of mind for us, especially in April, working in this industry. A lot of people are, we're hearing it on calls. A lot of people are really shell-shocked and surprised about their tax bill for last year and really wanting to develop better habits with their money and have more structure within their business. So that way they can ensure that hey, okay, maybe I got a surprise 30 grand tax bill this year, but I am going to do everything I can to make sure that that does not happen next year. Maybe an S Corp can save me a little bit of money. And maybe having a team of professionals that are helping me calculate and helping me kind of navigate this self-employment journey can help as well. Give me some organization, make sure that I'm paying my quarterlies on time. I'm not getting hit with penalties or interest because it does add up. So just starting with better habits, now's the best time to do it. So getting started with an S Corp, how do you do it? It's not that hard, y'all. We got you. So to set it up, the first step, like we talked about, we got to have that legal entity. So Collective would create an LLC for you, or you can do this on your own. You're going to want to file articles of organization with the Secretary of State in the state where you live. So there may be other state required paperwork. You're going to make sure that you want to file that. Going to do an operating agreement for your LLC. And that just specifies the terms of the business. And then in terms of the S election, what do you need to do there? So we make sure you got to have an EIN. Again, you got to have your LLC and your EIN, got to have that legal entity. And then we file the S Corp election for you with the IRS. We also have to register you as an employer in your state and city. So that way you can get your payroll account. Because like we discussed, that payroll is a very important aspect and requirement of the S Corp. And then you have your setup tools that you have to get everything organized. You have to have a bookkeeping. You need to have payroll software because that is a requirement. And then you're going to set up your money flows. So your business bank account. If you have, say you're a sole proprietor and you have a separate bank account that you kind of handle all your money through for your business, you likely will want to get a new bank account specifically for your new S Corp in the name and EIN of your business. You could also get a business credit card if you want to. And then as far as ongoing operations, with an S Corp, you're going to need to file business and personal returns for federal and state. So the S Corp does have its own separate tax return, and it's due every March. So it's due a month before your personal return is due. If you've been operating your business as a sole proprietor or an LLC for a while, you know that your business activity goes onto your Schedule C as a part of your personal return. That's just historically how you've done it. That is no longer the case with an S Corp. With an S Corp, all of the business activity goes onto the S Corp specific tax return. And that is Form 1120S. And like I mentioned, that form is due in March. So you file that return with the IRS. Collective, if you do go with us, we take care of that for you. And then you get a packet of forms from your business that you use to file your personal tax return. So instead of having all the information from your profit and loss go onto your Schedule C, you just get a W-2 that's a record of the wages that you paid yourself, and a K-1 that's a record of those distributions that you took, and you use those to file your personal return. You will also need to file quarterly payroll returns. Collective takes care of that as well. And then you need to maintain your entity. So there's state paperwork that you usually have to file every year called an annual report that just lets the state know what your business is up to. You have to keep up your books and tax obligations. So you're going to want to maintain your books on a monthly basis. It is important with an S Corp to have a bit more robust bookkeeping. And that is because of the 1120S S Corp tax return that we talked about. It's just a more complicated return, and you need S Corp specific accounting for that. You also will need to pay estimated taxes every quarter to federal and state, and ensure that you are calculating a reasonable wage and staying compliant with the IRS guidelines. So there's a lot of more moving parts here than you typically have to deal with as a sole proprietor or just a disregarded entity LLC. The good news is Collective handles all of that for you. So are you thinking about switching to an S Corp? We got another poll. So just let us know what your thoughts are. Do you think that it makes sense for your business? Are you in? Are you not sure yet? Do you think you're not ready? Just going to take a sip of my water. Okay. So what is it like having an S Corp on your own without Collective? We're back to, running your business with all these pesky bubbles, the S Corp setup. How do I calculate my reasonable compensation? What bookkeeping software do I need to do my S Corp books? What schedule do I do these on? I don't have time as a business owner to do my books every month. What payroll software do I pick? How the heck do the taxes work? How do I do 2 returns every year? How do I make sure I'm in compliance with the state? I got to pay estimated taxes too. How do I calculate those? And then, of course, retirement. How do I get advice on retirement plans or benefits? And just ongoing financial advice. How do I get that without paying a CPA a huge retainer? That is where Collective comes in. So we kind of take all those bubbles. Again, we wrap them into just one cohesive experience for you where we handle all of those moving parts. So we do your books. We have our own proprietary bookkeeping software. We partner with Gusto, who's a wonderful payroll provider, to run your payroll. You get assigned your own account representative that can provide support and guidance. So you don't have that feeling of just being on your own. You know that you have a team of professionals that are experts in small business and experts in S Corp that have your back. They can talk to you about planning for retirement or exploring your options for benefits. We make sure that you're in compliance with the IRS and your state responsibilities. We handle your S Corp taxes and obviously the setup. Collective is available nationwide, and we work with sole proprietors, single member LLCs, and LLCs filing as S Corps. So no matter where you are in the process, we can work with you as long as you are making over 60K in self-employment profits. And that's just because, we want you to get some tax savings. So what should you expect with your first year at Collective? Obviously, the business setup is one of the first steps where we'd form an LLC for you, draft your operating agreement, we obtain your EIN, we do the S Corp election, and then again, we register you as an employer with the state. So that way you can go on payroll and get those tax savings. And then we provide guidance on reasonable compensation. We also provide full service bookkeeping. So we do everything except invoicing. We will set you up in our bookkeeping software. We set up the tools for you. We set up the payroll. We run your first payroll with you just to make sure you understand how it works. And then you get monthly bookkeeping and financial support. So we will categorize your transactions and reconcile your accounts. You get an expert review of financial statements. And we also deliver a monthly financial reports package to you that contains your profit and loss. So you always know what's coming in, what's going out, and where you stand, so that way you can better make those financial decisions. We also will send you compliance reminders to file any important state paperwork. And you have, again, a team of experts that you can message with questions or for advice. And then as far as taxes go, we will file your quarterly payroll returns for you. We calculate how much you should be paying in estimated taxes, and we send you reminders of those. Now, another cool thing with an S Corp regarding estimated taxes is that you're going to have to pay less of a chunk directly out of your pocket every quarter, because you will have some withholding through your payroll. And I personally always love withholding, because it's like I never had the money to begin with. So it's a lot easier to kind of fork that over to the government. It hurts a little bit less. So we will calculate, you still will need to pay a bit out of pocket, but we do the math and take all the guesswork out of that for you. And then we prepare the business tax return. So how much does this all cost? I'm sure a lot of you are wondering that. So for everything we discussed, we have 2 payment options for you. So we have our month-to-month payment, where you are not locked in to any contracts or long-term commitments. It is an at-will subscription, and that is $349 per month. Or if you want to pay annually, you do get a 15% discount. It comes out to be $35.60 for 12 months of service. So it shaves off about $630 total off of the membership. We do have a $199 onboarding fee that is one time only. And again, this includes the bookkeeping and payroll tools, and we are 100% tax deductible. So if you think, after this presentation, if you think that an S Corp is a good decision and it makes sense for your business and you would like to learn more, I would encourage you to schedule a call with one of our tax advisors. So somebody on my team, and they can talk to you more about your personal situation and see if it makes sense for you to be an S Corp and a collective member. We do have a special webinar offer. So if you do schedule a call with somebody on my team and you decide it's a good fit, then we can offer you 1 month at 50% off with this code right here, APR 10W24. So it's basically the April 10th webinar 2024. So you just give that code, to your tax advisor, and they will get that all squared away for you. So yeah, you can schedule a call here, scan this link. We'd love to talk to you, and we'd love to learn more about your business and see what we can do to help you out. So I will leave this up here, and let's get into the Q&A. Okay. And thank you guys if you stuck with it through the end. We appreciate that. So Aubrey asked, will you send out the replay or should I take notes? Yes, we will send out the replay. Will I be able to view this later? Yep, no problem. I'm an LLC. Can I file as an S Corp? Yes, you can. You can make that tax election for your business. If you want to schedule a call with one of our advisors, they can talk to you about, whether it would make sense for you and what that could look like. So I always encourage people to do that. And again, the link and the QR code are right there. What is the difference between S Corps and C Corps and LLCs? What should I start going into as a medical professional. So, Renee, the main difference between S Corps and LLCs and C Corps in general is just going to be the taxation. So, as we talked about, S Corps and LLCs are pass-through structures, meaning that the businesses themselves do not pay taxes on the corporate level, whereas a C Corp does. As a C Corp, you pay taxes on the business profits as the corporation, and then you pay taxes again as an individual. So you're subject to double taxation with a C Corp. Typically, C Corps are only recommended for really think like big businesses. So if you have a business where you're trying to raise outside funding, or you want to be able to have more than 100 shareholders and issue more than one class of stock, like common stock and preferred stock, then a C Corp would be better for you. But if you're just a small to medium-sized business, most cases an LLC would be better. But if you want more information or want to talk to one of our advisors on, what structure might be most beneficial for you, I encourage you to schedule a call where we can get a little bit more information from you on your personal situation. Okay. Interested in best business structure for setting up a Delaware Series LLC, elect S Corp taxation, tech software development. Gotcha. So, Brad, I see your question here. As far as what I typically advise, and I do typically tend to, just with my experience working in tax, being a tax professional, I typically tend to be more on the conservative side of things. So I usually recommend really looking at the laws of your state when deciding if you're going to form an LLC outside of your state. Typically, even if you form an LLC in another state, even if you work from home and all of your clients are remote, you usually have a requirement to also have your business registered in your home state as well. Otherwise, I know you said California, and I know they have that $800 franchise fee, and that is rough, and they are, a more aggressive tax state. However, if you form in Delaware and California sees that you have a business and it's not registered there, you would be considered to be illegally transacting business in their state. So at that point, you could be fined, you could have court costs, penalties, interest, and they could eventually suspend your right to do business in California until you register there. And you can find more information on this online for sure. Even on like LegalZoom, they'll say, do you want to form your LLC in Delaware or Nevada? If you say yes, if you read the fine print, it'll say you likely need to register in your home state as well. Keep that in mind. So then you kind of get into this situation where you're trying to, avoid that hefty franchise tax board payment, and you're trying to make things easier for yourself, but then you end up having to ostensibly maintain like 2 LLCs and do 2 annual reports and 2 annual payments. And the headache often just is like not worth it. So unfortunately, I wouldn't be the best person to make recommendations on that, just because I typically don't make recommendations to form out of state. Okay, and Stephanie, if you get paid as an independent contractor via Zelle and get a W-9 at the end of the year, can you get paid via Zelle to your name and that be processed through your taxes as the S Corp? Yes. So great question, Stephanie. In this day and age, a lot of people are getting paid through Zelle, PayPal, Venmo. you can absolutely get paid to your Zelle account, but you would want to have that routed to a new business bank account that you would set up for your LLC slash S Corp. So you really do want to have the bank account in the name and EIN of the business. And yeah, you can have those payments go into there as long as they are on the books. You are good to go. Okay. Sakina asks, can I have a copy of the slides? We will send out a copy of the recording. I don't believe that we send out the slide deck, but we will absolutely send you the recording. Okay, does the amount of pass-through profit determine the tax rate that you pay? So yes, Carolyn, the amount of just total business profit and all household income is what is going to determine your tax rate for income tax purposes. So regardless of, the breakdown of what's on salary versus what is going to be taken as distributions, you still have a requirement to pay income tax on every dollar that you make. So yes, that the amount of profit will determine your tax rate. Okay. Is there a special form to use for the distributions from the pass-through profit of the S Corp? So in terms of the form that those are recorded on, that gets recorded on your Schedule E as part of your 1040 tax return, but you don't need to fill out a form to take distributions. You just transfer from your business account to your personal account. And then on your books, you would just want to notate that you took a distribution. Can you change from an S Corp to an LLC? So Lauren, if you had an LLC, you submitted an S Corp election, and then say something changed with your business, you took a full-time job and you were no longer going to be making over 60K per year, you can revoke your S Corp election, and then your business would go back to being just your default LLC. You just would not be able to submit another S Corp election for a 5-year period for that business. So is the 7.65% the employer portion of your self-employment tax deductible from your business? Yes, it is. That is a business expense, Carolyn. Great question. Are there requirements to set up an S Corp, like a board of directors or anything else? Not with an LLC-based S Corp. An LLC-based S Corp is a bit simpler. There's a couple less steps than if you had an S Corp election tacked on to a C Corp. With a C Corp, you would need a board of directors. Okay, Duran asks, I've heard at 40 to 50K for S Corps because of the cost of establishing. Why 60K? So that's a great question. And that is a collective threshold, not necessarily an IRS threshold. So we factor in the cost of our services and other similar support services, and we set that threshold at 60K because that's around the break-even point when you're going to start saving a little bit more than you're spending on support services. So, if you are hitting a little bit below that 60K, there's not going to be any penalties. You're not going to go to tax jail. It's just, you may not see as many tax savings. Okay. What if my company hasn't grossed any income, but my business structure has been in place for 2 years? This year is the year of my earnings. So, Sakina, if you're not having any profit, then you probably want to hold off on the S Corp until you're reaching about, 60K in net profit. That's really, again, like we just discussed, that's where it becomes it makes a little bit more sense to switch over to being taxed as an S Corp. If you're not profitable, you're not going to see the benefits of an S Corp. You won't see any tax savings, and you would just be entering into a more complex business structure without receiving any benefits. Okay. Can collective work with my existing payroll company? No. So for our services, we do just have the one package. We don't have any a la carte options right now. So it would be, collective payroll powered by Gusto is who we would run payroll through. If the LLC is in another state, should we switch to an S Corp election? So that really depends. I would recommend, scheduling a call with one of our advisors so that way they can get a little bit more information on your situation and kind of tailor a recommendation to your specific situation. We kind of discussed earlier the out-of-state LLCs. That isn't something that we typically recommend, and that would be, out of scope for our services. We do not work with businesses that are not registered in their home state. So in terms of whether it's the right time to switch to an S Corp, just schedule a call with one of our advisors and they can help. Okay. How does the math work as my company grows and I start hiring employees? Because then I'm paying employer taxes for them too, or is it better to restructure again at that point? So that's a great question as well. Yes, you would be paying the employer portion of their taxes too. So, if you are thinking of hiring employees in the future, you may want to do like a cost benefit analysis in terms of what that would look like for you, if it's better to pay them as W-2 employees or as contractors. And then also you'd want to reference your state laws regarding employees versus contractors. You could always talk to like a financial advisor and they would be able to give you more tailored information. What's the difference between S Corp and C Corp? So I think I answered that earlier, but it's just the taxation. An S Corp is a pass-through business structure where you don't pay taxes on the business profits. An S Corp is just a tax election, whereas a C Corp is a legal entity and you are subject to double taxation, once on the corporate level and once on the individual level. If I use a bookkeeping software already, do I cancel that and only use your service instead after signing up with the collective? Yes, Dave. So you likely wouldn't need your FreshBooks anymore. The only kind of exception to that would be if you are using it for invoicing and you're really comfortable with that. We're really flexible on invoicing tools. We do have invoicing functionality built into our product, but we don't force you to use it if you already have a system that you're comfortable with. So if you're invoicing through FreshBooks and you like it and you're comfortable with it, you can always maintain that subscription just to do your invoicing. But as far as your categorizations and reconciliations, Collective would handle that through our collective accounting product. If I haven't even formed my company yet, how do I know I'll make more than 60K? So that's a great question, Bonnie. Typically, you kind of base your projections off of some like relevant history. So it's probably better to wait to, see like what kind of contracts or customers you have. Maybe do a quarter or two as just an LLC, or sole proprietor. So that way you can kind of like get a pulse for what business looks like. And then you can kind of base projections off of there for the year to see if you are going to hit the 60K mark. And if not, maybe just keep rocking and rolling as a sole prop or an LLC until you get close to that mark. Do you work with the same person with your company, or will it be a team and you talk to somebody different every time? So that's a great question as well. Excuse me. You will have a dedicated member relationship manager, and they're going to be somebody like me that's a tax professional assigned to your account. So they're going to be an enrolled agent like I am. Some of them are CPAs, and they're just there to provide support if you have any tax related or collective related questions. You will interact with other members of the team as well, but your member relationship manager would be looped into all of those conversations. So they can always, be your kind of main point person. You don't have to like try to remember who you talked to last. Everything will just go through your MRM. Okay. Can you help with setting up an LLC only? That is the best option for me starting out, as I do not have the profit requirements yet to support an S Corp. So great question, Karen. And I love that you're, thinking about this the right way. We just have our full package, but you can always check out. There's a lot of companies that do just the LLC formation. LegalZoom, Zen Business, Ink File. Oh, I think they actually changed their name to Busy. But any of those companies would, they're trusted online services. Any of them would be able to help you with setting up your LLC. Do you recommend putting your LLC in an irrevocable trust or revocable? So trusts are not even remotely my area of expertise, Renee. I do apologize. Trusts are insanely complicated. I would definitely talk to a financial advisor about that question. I don't even want to try to answer because I won't be able to give you a good answer. So yeah, my answer would be definitely check with a financial advisor about that. I have a C Corp with an S Corp election. Can I be a client of Collective too? So unfortunately, not at this time. There's absolutely nothing wrong with how you're set up as a C Corp with S election. However, Collective solely works with LLC based S Corps. It's just the model that we started with, and we simply just haven't expanded to additional entity types yet. If we do, we'll likely send out a blast on Instagram. And at that time, we would be able to take you on. But as of now, unfortunately not. But there's nothing wrong with how you're set up. If you live in New Jersey, but operate out of New Jersey, New York, and Pennsylvania, do you need to register in all three? That's a great question. And it really depends on, where you live. If you're solely just living in New Jersey versus part of the time living in New York and Pennsylvania, there's something called a substantial presence test that the IRS does. And then there's also something called state nexus that depends on how much money you're making in those states. Some states also have like reciprocity agreements. So it really just depends, but you could always schedule a call with a member of our team and they can talk to you more about your personal situation. Okay, Olivia, yes, we will absolutely send out the recording. I'm sorry that you missed part of it. If you have multiple LLCs, do you believe it makes sense to have them all under an S Corp? Is it determined based on annual income? So that's another great question. Renee, that would be great to ask like a financial planner or even a tax attorney. We here at Collective, we do just work with single tiered business structures. So holding companies, or I think somebody asked earlier, umbrella companies, series LLCs, all of those are considered multi-tiered business structures, and they are just inherently more complicated. There's nothing wrong with those structures. We just try to keep things really streamlined here at Collective. That's how we're able to kind of keep our costs so affordable. But yeah, typically the LLC is like a holding company. Since it is more complicated, you're probably going to, it's a trade-off, right? Like it's more complicated, but it could make your taxes slightly more simplified for you, but quite complicated for whoever is preparing them. So typically you're going to want to have that structure set up by a tax attorney who really understands and works with holding companies on a regular basis. And it's likely going to cost you more in terms of a retainer to maintain that type of structure just because it's more complex. Okay, $200 a month. That still makes sense to set up an S Corp. So Stephanie, yes, your question. If you're making about $1,500 a month right now while you're building up your consulting services, I would say, yeah, you can do sole proprietorship, you can do an LLC, either one. LLCs, they are a really great option because you get liability protection. So, as a consultant, I'm not sure how important that is to you, if anybody, would be really coming after you, but the liability protection ensures that nobody can kind of come after yourself and your personal assets. Also, LLCs are great infrastructure. So you also get tax flexibility, like we kind of touched on earlier with an LLC, where you have the option to choose how you're taxed. When you're a sole prop, you're kind of just stuck being taxed as a sole prop. So I would say, if you think that an LLC makes sense for you, if you're kind of building things up and your end goal is to operate as an S Corp, as long as your state, it depends on where you live, as long as your state doesn't have any really crazy taxes for LLCs like California or New York City, it may make sense for you to go ahead and set up your LLC. Otherwise, you could always just stay as a sole proprietor and kind of reevaluate things later this year or next year when you have more data. Okay. I have dependents. How am I able to incorporate them into my business to raise money for them through my business? Will I see a deduction from dependents within the S Corp? So as far as incorporating them into your business, if you mean hiring them as employees, a lot of that is going to depend on, your state laws, how old your dependents are. You can have employees through your S Corp, but if they are related to you, you really want to make sure that you're documenting the type of work that they're doing, that you're paying them a rate that you would pay any other employee, that they're not getting special treatment. As far as a deduction from dependents with the S Corp, if they're employees, their salary and their portion of employment taxes would be a deduction for you. But as far as just a deduction like you get on your personal tax return, you would still continue to deduct them on your personal return, on your 1040. Okay. If I have multiple lucrative side hustles as a financial planner, do I need separate S Corps for each side hustle? Affiliate marketing, Amazon store, skincare business. So typically, Rosalind, you want to separate business activity if it's different. So the IRS uses different business activity codes to just kind of identify what type of business you're running. So if you have, an affiliate marketing business and then a skincare business where you sell skincare products, those are likely going to have very different business activity codes, and they are called NAICS codes. And you can always just take a look at them and see like which ones would pertain to your business. But typically, you want to have, like I said, you want to separate those activities if they're not the same, because what could happen is if you set up your affiliate marketing business and the IRS audits you and they see that that is what your business is coded as, yet you have all of these expenses for your skincare products, they could say, okay, well, these expenses are not industry standard for affiliate marketing. We're going to disallow them. And not getting credit for your expenses sucks. So yeah, we don't want you to get into that situation. So I always kind of recommend, like, if you're in doubt, just go ahead and separate them. Okay. Does a one-person operation S Corp have to keep records of monthly board of directors meeting notes? Shardella, not if you are an LLC-based S Corp. If you're a C Corp-based S Corp, yes. Do you recommend us putting our company vehicles and homes through the S Corp? So your home, you would get the home office deduction if you do work out of your home, which you get the percentage of your home office that you use exclusively for business. You can deduct that. You can deduct a portion of your utilities, like your mortgage interest or your rent, your cell phone as a business expense. Definitely recommend that. As far as vehicles, it really depends on, what the vehicles are used for. If they are used exclusively for business, then sure, they can be a business deduction. You can depreciate them through the S Corp. But if they are mixed use, then we typically just recommend, like the actual mileage deduction. Oh, sorry, Brad. Okay. You marked my medical expenses question. Da, da, da. Do you have a directory referral link or phone number for finding tax lawyers or CPAs? I apologize. I missed your question. Let me see if I can scroll up and find it. I must have accidentally clicked it. Sorry, I'm scrolling back. Okay. Can you recommend an additional strategy for having one's company pay for the owner's medical expenses? Unable to purchase adequate health insurance that covers anything. Out-of-pocket medical expenses not covered by insurance. Forced to finance this. Ugh, I'm sorry. Yeah, that's annoying. A lot of our members do just go through the marketplace to find a health insurance plan, and then they can, you can deduct the premium as your business expense. I think Gusto typically has like a lot of group plans. We do have a recommendation you could take a look at. It's called HBG or HGB. I have to look it up. Give me one sec. HBG Solo. They have some health insurance plans. One sec. HBG Solo. I would check them out. It's just hbgsolo.com. And I think they have a calculator on there where you can kind of figure out like coverage costs for your health insurance. So I would start there and check them out and see if they have anything that can help you. We don't have any type of directory or referral link for like a tax lawyer or CPA, because that's going to be just like a regional kind of thing. So we don't have any direct references for that. But we do have, a connection at a firm called Payroll, Paro, for CPA. Let me give you my email address. If you want to shoot me an email, I can I'll reply and send you the link to HBG Solo and to our contact at Paro, where you can kind of chat with him. His name is Justin, and see what kind of like recommendations he has and where he would be able to help you out. My email is just E as in Elizabeth, and then my last name, Mullins, Mullins at collective.com. So emullins at collective.com. Shoot me an email. I'm happy to send you those resources. Okay, I have a question on using part of my house as a business office. Is it better to expense the portion of the house as a monthly rental or use the Augusta rule? So, again, Vonna, I'm a little bit more conservative. I think the Augusta rule really only works in certain situations. You need to be cautious with a lot of this, like Instagram and TikTok tax advice. A lot of it is coming from people who are not tax professionals. And it can be a little dangerous. So we personally at Collective just recommend deducting the portion of your home for that's used exclusively for business. Okay. Follow-up question. What is the difference between LLC-based S Corp versus just an S Corp? So there is no such thing as just an S Corp. An S Corp is not a legal entity, and it does need to be anchored to a legal entity because it's just a tax status. So you can either have an LLC-based S Corp or a corporation, like a C Corp based S Corp. Excuse me. And the difference would be that the LLC based S Corp does not need like a board of directors. There's just a couple fewer requirements. Okay. You got it. Yep, that's my correct email address. Yeah, shoot me an email and I'll send you Justin's info at Paro. And then let me just check the chat for any additional questions. And sorry, guys, I've been talking too long. I keep coughing. Okay. The replay. Okay. Brand new to my side business, working client to client as a consultant. Haven't picked up my first project yet, so no income. Should I work on getting the LLC filed before taking on any work? That's really up to you. You don't have to. You can do it whatever way you want. If you want to just operate as a sole proprietor for a while, you can. But if you think this is going to be kind of a long-term, I guess, career for you as a consultant, then yeah, you can get that infrastructure in place. Excuse me. If you receive money as a sole proprietor, it cannot later be attributed to your S Corp or LLC. So just keep that in mind. Any sole proprietorship income is kind of stuck as sole proprietorship income. Excuse me, guys. I'm sorry. Okay. I think that's it. Looks like we hit all the questions. Oh, wait. Hold on. We got a couple more. Got that one. Just answered that. Sarah's going to send that out within the next 24 hours, Kara. Multiple online businesses, what is it best to set them up, order a holding company? Yeah, if you want to set up like serious LLCs or a holding company, we don't handle those at Collective. They're just a little more complex, and at our price point, we just can't take those on. So I would recommend, if you do want advice on that, speak to a tax attorney and they would be able to best assist you. If we filed our business as an S Corp today, it would only start date for 2023. So with Collective, if you started today with us, if you already have an LLC that's been in place last year, we would be able to go back to January 1st, 2024. If you don't have an LLC, the S Corp start date would be the LLC formation date. So the S Corp start date cannot predate the LLC formation date. Hopefully that makes sense. You may be able to also, like if you had your LLC for all of last year, you may be able to find an accountant in your area who would backdate that to last year. But it is a large administrative burden because of all the moving parts with an S Corp. So typically, a CPA or tax attorney would probably charge a large retainer to do that. And if you already filed your 2023 taxes, you'll have to get those amended. If I filed as an S Corp today but didn't pay salary, what happens? So the reasonable salary is a requirement of the S Corp. Typically, if the IRS were to audit you and see that you didn't pay yourself a salary, what could happen if you don't get into compliance is they could reclassify all of the distributions that you took as wages, and then you would have to pay back payroll tax on all of those. And then that would likely blow your S Corp status and you wouldn't be able to re-select for 5 years. Let's see. Okay. I think that's it, guys. So thank you all so much for attending, especially those of you that stayed through the whole Q&A. I know it was a lot, but thank you so much for all of your wonderful questions. And I really hope you guys schedule a call with one of our advisors. That way we can give you more information regarding your distinct situations, and we'd love to learn about your businesses. So thank you guys so much again, and have a wonderful day. Bye-bye.